What's up, everybody? It's Luke here, back again on the Option Bomb Network. Today, we're just going to be looking at how the heck do I place or trade a naked strangle, right? That is probably my favorite trade to place, um, but it's also a lot of people are scared about them because when you're talking about naked options, the one thing everybody goes to is like, oh, there's unlimited risk to the upside. Oh, there's unlimited risk to the downside. Well, that's true, but when you are also talking naked options, you do have more risk, but you also have more flexibility. You can roll up, you can roll out in time, you can do all sorts of things that you can't do with defined risk trades, which is why I like them. So, what we're going to look at today is how do I find a stock, an underlying stock, to place a naked strangle on, and what strikes do I pick, what time frame do I pick, and how do I become profitable? So, to start off with, the software we're going to be using is the TastyTrade platform. I love this. I follow their mechanics a lot when I'm placing my trades, and their platform is just set up for options. The other thing I like to use is ThinkorSwim for my charting. Now, there's nothing really special about this. I've just kind of grown up with it. I've used it for probably 10 or 15 years, and I just love it. I'm familiar with it. Any charting software will do. And then I have my brokerage account. I'm using E-Trade. It just happens to be where my money is. Any brokerage will work as long as you have a level 4 margin, a trading account, and level 4 options, which will let you sell calls and puts. So let's go back into TastyTrade and figure out what stock we're going to use to sell this naked strangle. So first off, I'm going to click on these three bars here. This pulls open these watch lists on TastyTrade. Over here, there's a funnel icon. So I'm going to click on that. And my filters are, I have my IV rank. So this is the implied volatility. The IVR is not just the volatility of the stock, but it's compared against itself. So you have some stocks that are super high, like Tesla, um, Oklo. Those have really high volatility, but compared against themselves, they might be high all the time. So what we want is we want when the stock's volatility is high compared to what the stock is normally at, that's what we're looking at, and that's what the IVR measures. So we're typically looking at anything, I like to say above 30. Sometimes I'll dip down to 25 if the chart looks good. So we're going to put our IV rank filter anything from, we'll just say 20 up to 100. And then we do not want any stocks that are going to have earnings in the next little bit. We also want 3-star or 4-star liquidity. That'll give us tighter spreads, and it'll also help us get out of the trade quicker if we want to take a profit or if something goes haywire and we need to GTFO. So now this is applied, and I'm going to sort by IVR because I'm looking for one with a high IV. Kind of looking down here with my account size, I like to trade stocks that are over $100. Sometimes I'll go down and trade multiple contracts, but just to keep the fees down and to trade bigger names that might not move as much, I like to trade stocks in the $100 range. So I've already done a little bit of looking and I've found APH. It's $140. It's got a 34 IVR and it's a 3-star liquidity. So I'm going to click on that and then I'm going to click trade. Usually when I'm selling contracts, I'm going to go out about 45 days. And I'm going to try stick to the monthly cycle. Some stocks have weekly option cycles. Those are usually not as liquid. And you can end up, having wider spreads and just, it's not easy to make money. So we're going to go out to January, which is 43 days to expiration. We want to be around that 45 range. We're going to open that up. And then in TastyTrade, you see a couple things here. This orange bar shows the expected move of the stock. The blue horizontal lines are the 1 and 2 standard deviations of the stock's normal range. So usually I trade around a 16 delta. So this would either be like a 155, 125 or a 120, 160, 120. I kind of like this 155, 125. It gives me a lot of juicy premium. It's still out of the expected move of the stock. Got a 34 IV rank, so all things look like it might set up well for this. So next thing I'm going to do is I'm going to take APH, I'm going to go to ThinkorSwim, and I'm just going to look at the chart. This is a 5-minute chart. We'll go to 4-hour chart. So we're going to go 155. I already put these lines on here. 125. Then I'm just going to zoom out. I'm going to take a look and be like, okay, I mean, we have a lot of price action, all the way back to October of 2025. So almost 2 months worth of price action within this range. And we bumped up into that range after earnings, right? So my gut tells me we're probably going to stay here unless the whole market takes a dump. We don't have earnings coming up because we made sure that we filtered that out, and we can see the next earning date is January 28th, and what we were going to sell was the January 16th. So we're outside of the earnings cycle. We've got a decent range here. We'll go back to the 4-hour with a lot of, we moved up after earnings, and everything's been trading in this range since earnings. We'd have to break out to a new high for the top to get tested, and we'd have to break this swing low for our bottom put to get tested. So overall, I think this looks like a decent trade. And now let's go try and put it on for real. So we're going to go out into our brokerage. I'm going to click trade. I'm going to put in APH. And then in here, your platform might be different, but I'm going to click add to options. Make sure we're selling, right? We're not buying this. We're selling the contracts. We're selling option premium. We pick our correct expiration, which is Jan 26. Our call was 155. Our put, I believe, was 125. Let's go make sure. 55.25. And we're collecting 395. Now, this is the midpoint. I always like to just stop, put in the ask, hit preview. I'm going to send this off. Make sure I got it. Sell 1, Jan 26, 55.25. Call, put, 420. Preview, send. Nothing. All right, so now what I'm going to do, I'm going to go modify order. I'm going to click it down 5 pennies. Preview, send. Let it sit for a little bit. Nothing. Modify order. Go down 410. Preview, send. Still nothing. 405. Preview, send. Usually it'll go right away if we're going to get the trade. Let's go down to $4. And we might not get this, and we might have to go below the mid price, but you never know. And sometimes every 5 cents helps. Try $4. Still nothing. All right, let's go mid price. Okay, mid price hit. Maybe I should have tried like 398. Okay, so now what I like to do, and the way I keep track of my trades, is I use sticky notes. I'm old school, right? So I'm gonna write APH. That didn't work. All right, so I write APH. I write 155, 125. Down in the bottom, I'm gonna put the price that I got it at, so it's 3.95. And then up on the top of my sticky note, I write the IV rank, which was 34.4. Okay, then what I'm going to do is I like to make $50 on every trade. So I'm going to come in here, I'm going to click close, and it was $3.95, so we're going to go 3.45, and we're going to go good until canceled, which will leave this trade out there for 60 days. Preview, send. So now this is just sitting out here waiting, and if at any time it hits that price, it's going to execute and we're going to make our money. So that is how I go about putting on a naked strangle, going about researching the stock, placing the price, do some price discovery, try to get a good sale price, and then I immediately put in my sell order to make $50. Some people do a percentage. Some people, they try and make half of the price. I've found that $50 on $100 or more stock is really, really easy. I usually make 99% of my trades are profitable at the $50 range. I'll usually bat 99 out of 100. The ones that don't, I end up rolling out and either break even or I make a small profit. So by kind of limiting my upside, but making a lot of trades, a lot on top of each other, like I'll make 10 to 20 trades a week this way. And if you multiply that out, yeah, you're busy, you're selling a lot of contracts and monitoring this, but you're looking at $500 to $1,000 a week just by putting on 8 to 10 strangles and trying to collect $50 per strangle. So hope this helps. TastyTrade, Power E Trade, and ThinkorSwim are the platforms I use. Again, look for something with a high IV, look for something that's very liquid, and place your trade, and then just monitor it. Hopefully, maybe we'll see. This is doing okay. I was going to say we'll see what happens when a trade goes wrong, but that might be another video for another day. So again, thanks for tuning into the Option Bomb Network, and we'll see you tomorrow for our live trading update.